Welcome to Markets Now. I'm Michelle Rook along with Ted Seifert, Zaner Ag Hedge. A mixed day in both grain and livestock futures trade and a lot of end of the month type scoring it looked like today, Ted.
Yeah, ended up end of the month squaring, and I think the biggest feature was there was no real new positions being put on, especially by the large money managers in the funds. And so without that, I think that just kind of made it a bookmark day where we just sort of really traded sideways. To some extent, while the bulls would have really liked to see soybeans extend higher after yesterday's reversal higher and sort of this threatening to break out to the upside, the fact that we didn't give back a lot of the gains from yesterday, I think is a good thing. I think it's a positive sign. But it also does give us another day to potentially get some sort of news, which, could be bearish. Who knows, right? So we'll see where we go from here. But today was just a very, very inactive day, very quiet. And like you said, the fund's not coming in to add to positions in any way, shape, or form, but not really getting out either. So that's maybe a little bit of a positive takeaway.
So what do you think about the soybean market, though? Do we need to put some South American weather premium in? Do we have any in there, considering Argentina is as dry as it is?
Yeah, I do think we have a fair amount of South American weather premium there. In fact, we've kind of thrown some fairly bearish news at soybeans here over the past few days, specifically starting last Friday with Argentina, extending or renewing the soy dollar program to really flush out really all of their soybeans and products, really all the ending stocks that they might have, which could take away from some of our exports. So I'd say that's a fairly bearish thing for the market, yet we acted very well with it. The price action has been really rather positive, especially when you look at what happened yesterday. So I think that is the soybean market saying, yeah, okay, bearish news aside, we got to focus on South America. There are some concerns that we have there, even though there is maybe a little bit of rain in the forecast, and the longer term forecast might be a little bit favorable. They're still well behind on precip. So until that changes, I think the market's very reluctant to really latch on to any sort of bearish news that comes along.
Yeah, and we did shake off the COVID news in China pretty well as well, to your point. Corn market, though, too, we're both, like you said, in trading ranges. We're moving sideways in both corn and beans. We continue to coil here, and at some time, we're going to pop out of those ranges. What's the catalyst going to be to do that?
Yeah, that's a great question, Michelle. We're all waiting to see what that is. And we've had a few things come along that we thought might do it, and it has not been the case. But ultimately, Michelle, South American weather is going to be the key. If South America has a really fantastic crop, or let's say even just a normal crop, then I think our global supplies build enough to really make it hard to justify the prices that we're up at. But the reason why we haven't broken off the highs is because, there are some hints of South American weather problems. And if they do have big cuts in their crop, well, then we're going to continue to have a tight balance sheet because we will start to see our export sales really pick up. I think we'll know in the next month or so. I think by the end of the calendar year, we will have a direction in this market. And again, I think the major catalyst will likely be South American weather. But then again, as we've said, we've had news coming in from out of the blue really fast and furious for the last 5 years. Who knows what the next big story could be?
So corn still in its trading range, as we talked about, but that's at a time when funds have liquidated about a third of their long position. So that's pretty impressive, isn't it?
Yeah, it really is, especially in the low volume environment that we've been in for quite some time. So for them to be able to come in and do that, there's got to be buyers on the other side. And those buyers have kept the market really very flat. So on one hand, you say, okay, well, you're not going to get this huge fund flush out. So that's positive. But also, you wonder if there's going to be anything to get the funds really inspired to get long again. And without them coming in to get long, there's been a lot of buying power that's been used up, keeping the market sideways. So you can look at this as a very double-edged sword. And again, I think that's part of the reason why we are really indecisive on choosing a longer-term direction right now.
And the market really didn't get shook up either about the talk of the GMO corn ban in Mexico or anything like that either. That was also kind of impressive.
Yeah, I don't think the market really ever believed that Mexico could make it so that they were only importing non-GMO corn for everything. If they were to do that, I mean, that would really cut U.S. exports very dramatically. We just don't have the non-GMO corn to send to them to make up for those types of numbers. But that was really unrealistic from the get-go. I don't think the market ever really priced that in. So then the news here this week that okay, it's really based on human consumption. Well, that's such a small percentage, and that's what the market was thinking originally. So it's really been kind of a non-factor. All the talk coming out of Mexico, the market's just really shrugged that.
So, Ted, the wheat market has been pretty beat up. Technically, on the charts, looks pretty awful. Funds are very short, though, in Chicago wheat, like 3.5 year lows, or they're 3.5 years since they've been this short in the market. And so, what do you think? Is that market about done going down? Are we close to a bottom?
Yeah, I mean, we do have those lows that we are still continuing to hold from, a couple months back. We could likely try to see a bit of a bounce from here. Now, whether it holds or not, whether it extends, that might be news driven as well. But yeah, the wheat market, I mean, we've thrown a lot of bullish weather, a lot of bullish, production side news at it. Just hasn't really sparked any sort of, enthusiasm. And we are, well, overpriced compared to we continue to be overpriced compared to the rest of the world. So that is a problem for our exports. Although, I'm going to say wheat exports aren't nearly as bad from a percentage basis as corn has been. So yeah, I don't know. I think wheat has maybe done enough work to the downside for now. I'd like to see it try to see if we can get a bit of a bounce. If you get these funds starting to get out of their short position, that could really find some fuel to give us an opportunity to go higher. But if you break those lows from a couple months ago, then like you said, that chart does not look great right now.
Cattle market back up today. Was that just a technical bounce here? And what are you thinking about cash this week? Can we make it 9 higher weeks?
Yeah, I don't know. I mean, so we're very much waiting to see what happens with cash. We've had the pullback in the cattle market, yesterday being a bigger down day. The good news is that we didn't really follow through to the downside today. We continue to hold some key support. So just like we were talking about in the grains, kind of a bookmark day, end of the month. Let's just leave it where it is and see what tomorrow brings. You could say something very similar about the hogs too.